Hey, what's up, everyone? Welcome, welcome, welcome. Good morning, good evening, good afternoon, wherever you happen to be around the world. Thank you for joining me here on Piper Academy. I am Army Piper, coming at you Monday through Friday at 9:30 a.m. Eastern Standard Time, bringing you guys the news, the markets, the TA, and all that good stuff. So appreciate you all being here. I already had some people in the chat talking. I got some stuff to be looking at. Indie Rock, shout out to you. Shout out to Lex Caliber, Crypto Trades. We got Dustin Singer in here, Elo Brown, Crypto Antagonist. Mr. J was first in the shoot today. We got Crux of Crypto in here, and Gia S with her blue wrench, Bedredden. Glad to have everyone here that's joining me this morning to get this information. We had some stuff. Yes, you were here on time, Crypto Antagonist. I'm proud of you. If you guys enjoy this type of content, I'm coming at you every day, Monday through Friday, and trying to give you guys knowledge because at Piper Academy, we believe that knowledge is profit. So if you like this content, go ahead, hit that like, hit that subscribe button, do all that stuff right there because that's what helps me grow the channel. And if you really want to help, you can go follow me on Twitter at Army Piper, and you can share there on repost over there on X, I should say, and get that out to the world. Share it. Here, I dropped the link for this video, and it's out there. So check this out. We had my chain link hat's in there, and I wore this one today, and I'll tell you why in a minute. So we had economic data come in this morning. What is that economic data? We're going to go ahead and jump into it because we got quite a lot of info to get through today. So let's go over here. Let's pull up the economic calendar, and I'll show you what we're looking at today. What we had right here. I'm going to go ahead and hit refresh because there might be something new that came in. We had unemployment rate coming in and non-farm payrolls coming in. The unemployment rate came in neutral today. So it was previously at 3.8%. Consensus was 3.7%. Forecasted to be 3.8%, exactly what it came in at. So that's neutral. Should be good, right? Not going up in unemployment. People are not losing jobs. No, that is bearish for the risk assets like investing in Bitcoin or the stock markets because two things going on here. One, job numbers were neutral, so that means that what Jerome Powell and the Federal Reserve is doing is not wrecking the markets, or is not wrecking the labor and economy, I should say, which means he can continue to raise rates. There's not a big fear, a big threat to the economy and to the labor force if he raises the rates now. So that is why you're seeing the markets go down. We actually would need unemployment to go up. Um, for the markets to do good. So the lower this is, the more neutral this is, the worse the markets do. The worse the unemployment rate is, the better the markets will do. I know that's crazy. It's inverse there, but that's what it is. So while we don't want to see people lose jobs, your portfolios love it. Okay. Non-farm payrolls, those were the real big move came in today. This is how much is being paid out to all jobs on average that are not in the food growing, farming type stuff because those are seasonal, so they don't include that number in there. Okay. Previously was at 227,000. Consensus was that it was going to be down at 170, forecasted even lower at 150K. Actually came in double of what the consensus was going to be, and that is what we're really seeing play out here. I sent a tweet out or a post on X. I got to get that down. Yesterday, talking about uh, Biden was going to be doing a speech today here in about 2 hours. And I said, this is likely because he's going to come out and talk about how well Bidenomics is working. And shout out TA Tim from Investing Bros. They talked about that yesterday, this morning also, pretty much saying the same thing that I was saying. But yeah, that is the consensus across the board was that he's going to come out to talk about these numbers. And that's why we thought they were actually going to be good. Tried to give you guys a warning last night that if that was the case, we would see downside in the market. So this this is what is moving the markets today. Anything else big in here? Average hourly earnings year over year coming in about a little bit down, like point tenth of a percent. Actually better than the forecast, but not as good as the consensus. So not horrible there. Government payroll, of course, the government payroll's up. Look at that. Why wouldn't it be? Uh, because you know why? I'll tell you why. Because the government is actually much better at paying money out for cost of living allowance increases based on inflation than the civilian sector is. That's why that's high. What else do we have here? I think that's about it major today. We do have a 1% increase on used car prices. Go figure. Although year over year, used car prices are finally starting to come down, and that's a good thing. So, um, I think that's about it here. Next week, we're going to have, let's look through this real fast. Next week, we're going to have some Fed speeches going on here. We're going to have PPI coming in next Wednesday. FOMC minutes, which is going to be from the last FOMC meeting. It's the actual detailed transcript of what they said in that meeting. So somebody way smarter than me will be breaking into those minutes and seeing what exactly the sentiment was. And then core inflation. We're going to get our core inflation rates and our inflation rates next Thursday on the 12th. So that's going to be the big one to watch for next Thursday. Let's go ahead, jump in, see if there's a change to the CME, because we do have a little bit of a change here on the CME side. Yeah, 71% here now. It was previously sitting a little bit higher. Now we're almost at a 30% chance of a rate hike for November, but the one I want to see is December. Let's see here. Yeah, December very quickly coming up, and I suspect that by if the CPI numbers come in next week and they are back up again on inflation, we will likely see this here start to push up and this here push down, meaning that we might see a rate hike in December now based on these numbers. That's why Jerome Powell's on there saying, "Get wrecked." He wants to get this inflation under control. Higher for longer is going to be a thing, and with these job numbers coming in the way they're coming in, it makes that very possible for them to do that. So let's go ahead, take a look at our liquidations here, give it a refresh because I'm sure a lot has changed. 24-hour Bitcoin longs getting completely liquidated here. We've had a total of, let's see, in the past 24 hours, 17,609 traders were liquidated. The total liquidations come in at $53.25 million. The single largest liquidation order happened on OKX. It was an ETH USD swap, coming in at $1.2 million on a single liquidation. So that that is ugly. What else we had here? Solana had longs getting liquidated. ETH longs liquidated. AVAX shorts were liquidated. AVAX doing some movement, so we might take a look at that. Let's jump over to the crypto bubbles. Check it out for the daily here. Let's give it a refresh. Yeah, Rune, AVAX up. There you go. That's what I was just talking about. Rune is our big loser. AVAX is our big winner on here on the top 100 for the day. And let's go check out some news. Let's get into some news. And then we'll get into the chat. I don't want you. Get out of here. All right. This is actually some good news. Well, sort of. It's sort of good news. 27% of U.S. female crypto investors, shout out Gia, spend their profits on children's education. So while you got crypto bros out here going, I want Lambos, win Lambo, you've got U.S. female crypto investors, moms out there saying, win college education for my kids. So much different approach and a much different reasoning behind all of their investing and hard work that they're putting into watching the market. So if you're one of those people, male or female, that your investments are not for you, they're for your children's future, probably a smart move. We do have a lot of things going on saying that it's going to be rough for your kids in the next generation. So 27% of the investors in the U.S. and Turkey using cryptocurrency to fund their children's education. 19% of Chinese investors have invested a minimum of $100,000 in cryptocurrency. A significant number of female investors in South Korea and Japan are using crypto to enhance their finances. So people are starting getting smart. It's not just about Lambos anymore. I cringe every time I see that stuff, but now we're getting to see the other side. Why are people investing? Because they want to better their life, their children's life, and leave something to everyone else. So you're right, but college will never be free in America. Bedredden, he said college should be free. It is never going to be free in America because there is way too many lobbyists in places like Harvard, Yale, LC, Los Angeles, California. What's the college there? LCAU. There's just too much money in those colleges. They are never going to be free. If they do make it free, we have, nice, huge population of 300 million plus over here. And I would say at least 70% of them would take their free college. Um, it would be a community college, which would be pretty much make community college a worthless degree at that point. Because if everyone has it, it means nothing for the job for the workforce. So there you go. Um, let's take a look here. This is an article from the Forbes. I went ahead and got a subscription to Forbes also, so I can bring you guys these. That's true, Indy Rock. Indy Rock said college is free. When you're poor enough, we have Pell Grants. That's so true. That is a very true statement. How quantitative tightening and Bitcoin halving are converging. It's a crypto investor's must read. So let's go ahead and get into the nitty gritty here and talk about what is important in this article, okay? The buzz around cryptocurrency never dies down, and its market dynamics frequently intersect with traditional economic strategies. There's one discussion that's front and center right now, and that's the impact of QT on the crypto world. So QT has been a significant force in financial markets, primarily driven by the U.S. Fed's monetary policy. Quantitative tightening has been what the Federal Reserve has been really pushing on hard. And he said, in essence, QT is about retracing money from the system, retracting, I'm sorry, money from the system for the cryptocurrency space and Bitcoin in particular. The expansive money policies like quantitative easing has been often been a boon. It's really what has just launched every single cycle for Bitcoin's having has been the quantitative easing going on, especially when they were throwing out $600 pandemic checks. So that didn't hurt either. Driving investors to decentralized assets as hedges with easy, cheap money to play with. But when QT takes the stage, it's going to dampen the enthusiasm in the crypto markets. What are they saying here? They're essentially saying that if the quantitative tightening is going on instead of quantitative easing, then we will likely see that the crypto market doesn't have as much rally as we've seen in the past. So that's important to note. But here's the twist. As the QT era ends, it can be a godsend for cryptocurrencies because QT drains cash fiat, which must also drag liquidity from crypto as the reverse effect to how QE helped pump it in the first place. So that is what we're looking at here. That's the balance sheet. Keep going. Where's it at? It isn't a continuous process, as evident from the bailouts of banks like Silicon Valley Bank and Silvergate Bank. Shout out to failed banks. The QT's grip has been felt deeply. Most of them would argue that the failure of the crypto banks were also directly linked to the quantitative tightening, and were the other near miss bank failures that QE bump in the QT trend was used to save. So this is what they're saying here. Just to break this down in Barney style, bottom line up front, we may not see the rally of crypto that we've seen in previous halving events because of the quantitative easing being flipped to a quantitative tightening. So little convergence there may change that market history that we've seen there. What do we have next here? Let's jump into here. Bloomberg. Oil suffers the biggest weekly loss since March as volatility spikes. This is good. Hey, what's up there, Otter? Alex O Crypto in the house. Glad to have you here, man. You have a wonderful day. Also, I appreciate seeing you. Much love. Shout out, Otter. Guys, go follow him. Alex O Crypto. He's got a great YouTube show, and I love to get his insight on what he's seeing on the charts. So good stuff from him. So this might actually help us out with getting those reserves. I told you guys the strategic petroleum reserves were sitting at like a 33-year low. It was horrible. We had like 9 days left. We now had, ironically, shock, a big drop in the price of oil. So you have a great weekend too, man. And now we're seeing that this might be the opportunity to get those reserves built up a little bit. Not sure if we're actually going to hit the target of what they wanted, but Western Texas Intermediate held above $82 a barrel after closing. The U.S. crude benchmark has tumbled more than 9% this week with deep losses on Wednesday and Thursday. So perhaps we could see those SPRs get refilled and not have a huge shock on the. Hey, do me a favor, Gia or Crux. Can you grab the link for Alex O Crypto show on his YouTube and drop it here in the chat, please? Thanks. Um, so we may actually see that get straightened out there. Let's jump over into X hits the spot news, and let's get what we have in here. Look at this chart. This chart is phenomenal, and I love it. This is orange juice prices. It is orange juice prices right there. Ben Red, he said Alex O Crypto, just copy that name and you got it. Appreciate it. Orange juice prices up 315% since 2020. So if you guys are wondering where all your money could have gone, you could have put it in OJ. You could have put it in some orange juice. So, me personally, I like to put vodka in my orange juice or tequila in my orange juice with a little bit of grenadine to make a tequila sunrise. But money can go in orange juice too, evidently, and it's really, really good. So there you go. Um, $375.95 per share on orange juice commodities there. So orange juice prices are rising so fast, they just hit their limit up threshold and the market actually got stopped. They were halted by the New York Exchange there. Or since 2020 low, the prices of orange juice is up a massive 315%. This year alone, orange juice prices have jumped up 105%. Meanwhile, live cattle prices are up 125%, and olive oil prices are up 130%. Yeah, you know what this means? This means inflation at work. So it's not like it's any more expensive to grow. It's just more expensive to manage and to do all of the maintenance and stuff like that in the field, and then process it and then send it out and ship it. So there you go. If there's inflation at its finest on OJ, could have made some money off of that. So the jump in various food commodity prices is not entirely due to inflation. However, rising food prices certainly are contributing to ongoing issues. It truly is a unique time to be an investor and trader. Yes, you are so correct there, Kabisi Letter. I appreciate all of your stuff you put in. Italians are taking over the world, bullish on olive oil, right? No kidding. I love olive oil. Let's go see what else we got here. This is another chart. Mortgage purchase application. I don't know why that turned blue. That's so weird. Get off there. There we go. Now bring it up. Mortgage purchase application index. Mortgage demand is now at its lowest since 1995. Rates are continuing to skyrocket up, so demand for houses is coming down. The average interest rate on 30-year mortgage just hit its highest since 2000 at 7.88%. Letter Alex. Have a good one, Otter. The average interest rate on the 30-year mortgage just hit 7.88%. Mortgage demands is now even below the average level seen in the 2008 crisis. So this line here is the average rate that it was at during the for demand. I mean, the demand levels in 2008 were even below that. So there's a couple of things here. If the demand for houses keeps going down, utterly ridiculous invasion. I love it. If the demand keeps going down for mortgages, we're going to see prices on homes start to come down. We're already seeing it. House prices are starting to drop. What happens when all these people that are paying this insane amount of money into their he meant we out like the squad incoming? Oh, nice. Okay. Well, I'm down with that too, Crux. What happens when the money starts to leave the valuation of these homes starts to come out and people are upside down on their mortgages and now they're paying a majority of their home payments on interest rates um, instead of on principal because they're paying high interest rates. This is setting that to be very ugly for the housing market. I just want to put that on there. So what else do we have here? That is that at its surface, the housing market. Nope, back one more. There we go. We have just in market futures. Some bullish news for you. Market futures now show a rate cut beginning in June of 2024, sooner than previously expected. After the last Fed meeting, futures briefly showed rate cuts beginning in September 2024. Now the expectation has moved up by 3 months, and there's only a 34% chance of another rate hike. We will see how this plays out with these numbers. That's true, Crux. And that's the goal. That's the goal. That's why there's so many apartments being built. Um, Yet Treasury yields continue to hit 16-year highs. Why is this happening? Maybe the Fed is not entirely to blame for higher interest rates. Rising deficit spending has long-term rates rising and risk flooding the bond markets with supply. So higher rates are here to stay. That's just the moral of the story there. So, but if we could get a rate cuts in June or July, I would be down for that. Yeah, what Gia said. I appreciate you. I'm trying to pay more attention to the chat, guys. So, uh, I was told by Crux that I did a horrible job of checking on the chat after each article. Kabisi letter: while Silicon Bank and First Republic Bank are gone, their impact is not. Funding costs for banks remain well above where it was at prior to the regional banking crisis. In fact, there's now a 75 approximate basis point gap in funding costs between regional banks and larger banks, meaning that it is more, it costs more for regional banks to get um, funding from the Federal Reserve than the larger banks because they're higher risk. Higher risk, you pay a higher rate. So, regional bank crisis has changed the entire banking landscape. 5% money market funds have never looked better. Meaning, yeah, just put the bonds. The bonds is where it's at right now. You can see here what happened after the SVB pump up here. We had this rate hike that came in on how much it cost, and then we had another one here when the First Republic, and it's just sitting much higher. So if you're a regional bank, it is costing you a lot more money to operate, and if you're costing you more money to operate, it means that it's more likely that we're going to see some more regional banks get in trouble if we don't have a change there. So, what else do we have in X hits the spot before we jump into charts? Uh, President Biden, I think I talked to you about this already. He's going to be talking here. I did. He's going to be talking in about an hour and a half, and we're going to see what he says. And I guarantee he's going to come out and say, "Look what I did with Bidenomics. Um, only stocks can crash only a stock cat crash can rescue the bond market." That's what this person here said. According to Barclays, the magnitude of the bond sell off has been so stunning and short term, we can only think of one scenario where bond rallies materially. Uh, where bonds rally materially. If risk assets fall sharp on the coming weeks, the S&P is only down 5% in the last 3 months. Are we in for more pain? So here's what they said. Only a stock crash can rescue the bonds. Fed will remain a net seller of treasuries, term premium to rise. Japanese investors may favor domestic bonds as yields increase. And then global bonds are doomed to keep falling unless a sustained slump in equities revives the appeal for fixed income assets. So let's break this down. Let's jump out here. We're going to talk about this, and then we're going to get into the charts because that is the end of the X marks the spot news. So what this means, let me drop that down and we'll just put that over there. There we go. What this means, let's talk about it. Right now, bonds are being sold off. They're selling them off at a record rate, which is why we are seeing what we're seeing with the 10-year yield being up so high. And we can see that right here. There you go. That right there, that is the 10-year yield. And the reason it's pumping up that high is because people are selling them. If it was coming down, that would mean people are buying them. It's going up because people are selling off their 10-year bonds so that they can get them at higher rates later on, or because they don't have faith in the locking up their money in the federal government for the next 10 years. So short-term bonds are much higher. That's called the inverse yield curve for 2-year to 10-year bonds. What you want to see is that these rates are coming down, which means that people are holding them. 30-year bonds, trying to learn a bit more. Any insight? So the 30-year bond, there is a correlation. I think it's the 30-year bond and I think a 3 month maybe, Alex. I'd have to look in on that. I'm still getting my head wrapped around all of this. I'm getting smart because knowledge is profit. But what I do know is this part about the yield that I'm talking about. If they're selling these, the rates go up. Why this needs to come down, or why the stock markets need to come down to fix this, according to Barclay Bank, the analyst over there, is because yep, none yet. Absolutely. We had 11:30 a.m. Eastern Standard Time. That's we talked about that, and we think that he's going to come in to do all of his bragging about Bidenomics. So, um, which hey, he's going to take the credit, but we know it's not that. So if you take a look at the 10-year bonds here, for this to come down, the stock prices have to look way more promising. So if they drop, they're only down 5% right now. If they dropped like 20, 30% in the stock market, we had a massive stock market crash, then we would see people move back into stocks. Probably the same for crypto too, but that's what we're seeing right now with smart money. They are getting out of their bonds. They're sitting on a lot of cash, and when we finally get those stock markets to crash down, which I do believe is what we're going to see in the next few months here, that's going to be what flips the yield curves. Another reason that we might likely will see the Federal Reserve raise the rates because they want to bring that market price down so that people quit selling off and start getting into something so that this can stabilize over here on the this data here. This data. It needs to stabilize. It's going up way too hard. So yes, the inverse of the 2-year, the 10-year GIA that you asked about. Here's basically why that works that way. Oh, there's a poll. I didn't even know there's a poll. What captivates your attention the most from these morning streams? Technical analysis. Oh, I'm going to vote that. I'm going to vote that. TA is great, but news is fundamental analysis. So, um, 2-year yield versus the 10-year yield. When we see that the 2-year is higher than the 10-year, that means that the sentiment of the investor is that there is a likelihood of short-term money being better off in high yield than long-term in the U.S. government. Because remember, when you buy a bond, you're lending money to the federal government. People are more willing to lend money to the government for a short term right now than they are long term right now. And that's problematic. That typically leads into recession territory when the 2 to 10 year yields inverse on the flip. So yeah, all right, I got that. Too early in the morning to make my brain work that hard. Let's jump into some charts. Let's do that. So there's that 2-year, there's that 10-year yield. Let me go ahead and pull up for GIA that 2 to 10. There's the 10-year to the 1-year, up 0.31 right now. This is the highest it's been on this chart since October of 2022. So about a year ago now. And then we were back there again on this yield curve back in 2000. So there you go. There you go. There's that 10-year, 2-year yield. Let's go ahead and get out of here. I need to go back here, put this back on candles. There we go. And then let's go check out some Bitcoin. Oh, bitty boy. So yesterday we were having a conversation. I told you that we did get a bounce in the golden pocket here, and that if we were going up, and I put this on Twitter last night too, for those that do on X, it's X. Remember that. We do have a bounce here in the golden pocket. I said expect that we will not get much higher than 28,300. If we do, that's probably where we're going to reject from. But we are in a breaker block right now. So if we come back, watch for support on my blue trend line. That's that blue trend line right there. Let me go ahead and turn these off for 1 second. That blue trend line coinciding with the golden pocket. That's exactly where we bounced at last night. Giving it another movement up there, coming up and rejecting at about 27,800. Nunya, I appreciate it. Shout out, man. Appreciate you, Dustin. That's where we got our rejection. And then this morning, on this news of the unemployment, we did have a pullback, wicking down into the golden pocket, starting to pull back up now, but it's about that 50% mark. What I typically tend to do with a candle like this, not financial advice, this is how I roll. When I see a big, fast wick, I like to go and put an entry at about the 50% mark because normally it'll bounce up and then pull back in even more. Not always. Sometimes it does opposite like it did here. But that would not be a bad move for a trade entry on Bitcoin there, especially when you take a look at the fact that everything right now, we're heading into a weekend, low volume, all that good stuff. Anyone here from the Frankie Candles group? Well, I'm from the Frankie Candles group. I like to watch Frankie Candles, but I don't know if there's anyone else in here. We're still growing this, but I may actually be doing some stuff with Frankie Candles here soon. So I've been talking to him on the side. Shout out, Billy. What's up, bro? All right, so yeah, we watching for this right here to be coming back down. Watch and see if we hold this 0.65 at 27,239. And let's go see what else we got down here. We do have a trend assist sitting at 27,000. Nice psychological round number there. And then of course our dynamic reactor from the Chart Prime Pro Suite coming in at about 26,989. So they're going to be pretty darn close in relation to each other. Let's pull this off. Let's go on and see where our fixed range volume profile is at here and see how that's looking. This over here, fixed range. Let's see where we are there. Let's turn off. There's range fibs. Let's turn off my exponential moving averages and we'll put this on daily. The EMAs are off. They're off. Okay. Yeah, so we're still sitting right here, right at the value area high at 26,900 also. So there's a pretty decent support sitting below us right now. But in the grand scheme of things, we could easily go down and test those levels again. And if they break, probably not going to be a pretty sight. Still currently getting rejected under this diagonal trend line also. So be watching for a reversal there on that movement. We got the markets open. Let's go check the markets and see what the traditional market's looking like. It's not Jonathan Schaefer here on my alt. Okay. Appreciate it, bro. All right, so here we go. Let's check out the US 30. This is going to be our Dow Jones futures right now coming in on the 4 hour. I want to see that. Actually, we'll go to the hourly on this just to see. Getting a little bit of a bounce there on the hourly for the Dow Jones futures. Get our indicators up there. Yep, they were good. We did get a strong sell-off indicator here 2 hours ago, and right now we are making a bear flag sitting here on the on Dow Jones. Let's go check out the ES1 and see how the S&P 500 E-minis are doing. Again, another bear flag pulling out of these ranges and looks like, let's bring some oscillators up here and see how we're looking there. There we go. Getting a nice big fat curvature here, but we looking really low right now on the RSI Prime. Let's see the 4 hour here. There we go. Yeah, RSI Prime still has a little bit of downside to go. We are getting rejected on the 0 line here on the Oscillator Pro, and that typically leads to more downside. You can see here we had one that led to downside right there. A lot of times when this comes in this range and it cannot hold it, that is where we get rejection on that 0 line, and that's what we're seeing right now. So be careful on the the S&P 500 E-minis if you're looking at that today. And then the tech sector down almost a full 1% on futures right now, pushing it to the downside on this morning's opening. So, wow, markets are red. Go figure. Check out Tesla. Tesla pulling off of that 236 here. Getting that rejection off the 236 and coming in. Breaking on the dynamic reactor right now. So likely coming back down to about 250, I would assume. Amazon down, actually, guys, Tesla down 3%, just so you're tracking today. Amazon down about 1%, coming down and hitting on the bottom of this symmetric triangle. Likely going to print a dot of confirmation. Retest on that for the downside. I appreciate it, Jonathan. You're the bomb, man. Help grow the channel. It's a new channel. It's rough out here. Google, though. Google is up 0.19%. So my portfolio loves to see that I at least have one warrior in there fighting for me still. Let's go and check another look at Bitcoin here, dropping below that line. And then I want to go check out Chainlink. We're going to look at the Dixie. We're going to look at the Dixie first. Then we're going to do Chainlink. And then we're going to do some Matic and see what's going on with Matic and AVAX. That's what we're going to do. Let's go check the Dixie. Dixie looking bullish here. That was the chart that I put on this morning on the thumbnail. That was the Dixie. Can't wait. Factoid Elf. Oh, Factoid Elf is in here. I love when the Factoid Elf is in here. Guys, Factoid Elf. The Factoid Elf is from the Investing Bros. You should go follow them if you do not. It is BROZ. Investing Bros, and they do daily trivia on their show, in addition to technical analysis, news, and all that. Friends and family of the channel. So that's why I picked up a morning show. They had to move to the afternoon, so I'm here holding it down in the morning for them. They're doing a little pre-recorded session. I go live in the morning. They're covering the afternoon between Investing Bros and Piper Academy here. We're going to try to keep you guys in the know and in the knowledge. So taking a look, yeah, Dixie's still pumping up. Could get a lot more upside. I want to show you this right here. You can see it's just an absolute monster coming all the way back here in June of 2023 on the upside there. So not showing any sign of weakness in my opinion, and I suspect that we will see it continue to go higher into the months. Thanks, Bedred. Appreciate that. Dropping a link in there for the investing bros. Let's go check out AVAX. AVAX is up 6%. Goodness gracious, would you look at that? That is just a lovely chart. Crux, there was something that just happened recently with AVAX, and I don't remember what it was. If you can, they had some type of partnership. If you can drop it in the chat or let me know, I totally spaced what it was. You can see here that it was for a long time under the blue trend line here. Could not get above it. Finally got a bounce up. Hit that nice little retest there, pulled up in, and that was the lead off to all of this on that trend line. Let's go and drop in and see what we have on some traditional TA. So let's pull all this off. I do want to push this in there, and then we're going to go in and drop in some fibs and maybe some fixed range. So let's see, where are we at here? Let's go from this high to this low on the Fibonacci's. So we're going to come in here, grab a fib retracement. We're going to put that right there. Down to the bottom. There we go. There's our fibs. All right. Cause for concern here for my AVAX people out there. Don't go get bullish. You can see, and these are playing out. Anytime that you have play exactly on the fib lines, you know that you have the right picture, okay? And so what we did here was our high from this point to our low of this point. You can see that we had, perfect rejections here on the 382. We did have another play here on it. It pumped up, couldn't make it quite to the 50% there, and then it came back down, catching all of its support on the 236. Why this matters? Well, we had play and rejection on the golden pocket here, which was coming in at about 1021 to 1030. We pulled back down, retested that 50. Remember, anything above the 50% line, bullish. Anything below it, bearish. We retested it, showed it as support, up it went, broke through the golden pocket. We are now in the platinum pocket, the 786 to the 887. Whenever we get a rejection, whenever we get a breakthrough on the golden pocket, and then we make it to the platinum pocket, that is usually a range of reversal. So currently, what this means, Avalanche is currently in its reversal pocket. So we might likely see a little pump up to the 887 at 1091. And then from that point, a pullback, because as you can see, we pumped up through here on the 4 hour to the golden pocket, but we never came back to test the golden pocket. So being that we're sitting up here, very likely that we could see this reject either there or it just doesn't make it there. It comes back down, fails the retest here, and then comes back to the golden pocket. That's what I'd be watching for on those levels, and that's what you're going to want to see if you're going to get into a short there on AVAX right now. Let's go pull up a fixed range volume profile and see what we're looking there, because I want to teach you guys how to use all these different tools. There's some great tools in Chart Prime, but there's just some great free tools in TradingView itself. So I want to make sure that you guys know how to use them all. Let's go and grab that fixed range volume profile there. And let's go from back here where we had this definitive dump, and let's see what we're looking at for value area high. I see. Oh, look at that. Bam. There is your confluence. Right there, that purple line that you're seeing right there, that is your value area high on the fixed range volume profile. You've got your point of control coming in on the 236, and then your value area low right there just above the 0 line. If you look right there, the golden pocket where I was talking about it coming back to test, that's going to be your value area high also. It makes a lot of sense that it comes back, test this, double support ranges there, overlapping, giving confluence. Watch that for AVAX. If it comes down into that 618 and it holds that 618, that value area high, very, very good place to get into along there. So, I can't pull up a link, man. But guys, check out that link that Crux just dropped in there. That's going to be the partnerships that AVAX just came up with. But don't think that it can't come back and retest. So shout out to Seth in the house. I saw you in there talking about great insight. I appreciate it, man. Let's check the chat here for a second. Let's see what we got. Piper's Trading Army. Nice mic play. Appreciate you, bro. Indy, Dragon Slayer, Crypto Billy, just people who give a shout out. I love this community. You guys are the best community in all the space. Love it. All right. Let's get into some more. I said I'd check out Chainlink. There we go. So here we go. Another great example for you. I told you, couldn't try to get up in here. Got into the platinum pocket. Had a little peek out the top there. Likely was a grab. Yep, it was a grab from the previous ranges there. So came up into that range, back down in, and where did it come to? Back into the golden pocket. So even though it got the retest over here, that's where it came back in. It's currently sitting in the golden pocket right now after getting a rejection out of the platinum pocket on Chainlink. Let's go and see. I do have a fixed range volume profile here. I just need to refresh it. Come here, you. Thank you much. And let's see where this is coming from. This is going to be at rejection point off of that value area high also. Let me get it in there. Value area high, got the rejection there. If we do not hold this golden pocket, likely coming back down to 7.15, that's going to be the point of control on this fixed range volume profile, which goes all the way back to May 2022. So that's where I would watch out if we, since we broke beneath and then got rejected on the value area high, that point of control is what we're going to see. Let's throw on Chart Prime and see what it's saying here also. Let's get the other ones off and let's see what kind of confluence we have in the Chart Prime Pro Suite. Fib retracement, hide, fixed range, hide. Thank you very much. And then let's bring up the oscillators. There we go. Getting rejection on that zero line right now also. You can see right there is that dynamic reactor. So that's going to be coming in at 7.27. We do currently have a sell-off trend assistant there saying that if it does come up, could get a rejection on that level. So I wouldn't be looking for much higher than that on the 4-hour either. Sitting down at 650, that would be a previous range of support. There's a breaker block back there, but let's deal with things one at a time. One at a time. We've got those fixed range volume profiles below us, and then we've also got that fib retracement. So there we go, and there we go. So be watching for that dynamic reactor at about 725. Be looking for the 0.50 at $7. And if we break below that, I don't think the 382 is going to do 382 is going to do much for us. It's probably going to be back down here to this previous level, which was previous resistance right there. So, all right. VRVP is a free indicator. Yes, that is absolutely true. So he said volume profiles are not free, FYI. You're right. They're not a paid indicator, but you have to have paid trading view to use their indicator. So technically, yes, you're right. But you can use the VRVP. To use that, let's go up here. I'm going to show you guys a little something. Let me turn all this off and clean off the chart. So we have nothing but the candles in here. Here we go. You go up here into indicators and you put in VRVP and you're going to see visible range volume profiles. And so this will only show you what's visible, but you go in and you pull up the area that you want to have. And you can go in here. We're going to make the row size here. We're going to do the volume area at 70, but we're going to make this like 200. That's going to give you a lot more candles. We can even make it like 500 if you want, depending on what you want. It's going to give you much more detail. There you go. You put it in here on the range that you're wanting to have that on. So just like I dropped that fixed range volume profile from like the all-time high to whatever, I can do that right here. And we're just going to bring it to the edge. Let me bring that up. There you go. The edge of that right there. And that's going to be your fixed range volume profile. So you can see that we got here you go. Watch this. We're going to come over here. We're going to go look. There's a little peak right there. Let's hit that. Let's add a horizontal line. That's going to be a resistance point. There's one right there. We got another one sitting about right there. And you can just do this. And now you have ranges that you're dropping right there onto your VRVP. So it's beautiful. If you want to see what we have for support here, let's bring this and stretch it out a little bit like that. You can go, oh, look, there's one right there. Let's drop that on. Now we have that range. We also have one right here for this range. And oh, if you click it, it will happen. If not, it won't happen. And then, so that's going to be your point of control, that red line, and these are going to be your support and resistance. You can make them whatever color you want. And bam, you now have your fixed range volume profile for free with your value area low would be where it turns gray here, and your value area high would be where it turns gray here. 70% of all the activity, there's your point of control. And if you move it, it will change. So you got to make sure that it's in your visual range. It's why it's a VRVP. So I hope that helped you out, and I hope that you learned a little something there about the fixed range volume profile. So many things you can do, and that's why I like using it like this. Look, do you guys know that we get all this too? You get all these nice little heat maps, and you can go in and see. Let me go back to market cap. You can go in and see what's hot, what's not, what's neutral. Oh, look, Amazon selling off 0.91. Walmart getting wrecked, down 3.48. Apple down 0.6. Nvidia down 1.22. You can get a lot of info in there. And then you can also go in here and you can do news. I'll show you how to get here. Hit this tab, heat maps, news flows. Go into news flows. You want to see just about crypto? Watch this. Come over here, you hit markets, you hit crypto, and there's all your crypto news right there. So you can get all of this in one place. Indie rock, patience. Patience, it's what you need. Patience produces uncanny profits. I am just chilling on cash right now, man. So yeah, there's how you get into the stock maps, stock heat maps, and in the news. All the economy stuff. There's a lot of great stuff on here. Let's go check out one last thing before we bounce here, because in about 10 minutes, who's on in like 10 minutes? Is somebody on in 10 minutes? I can't think. I don't remember. Anyways, someone's on in 10 minutes, and we need to make sure that we're off for them because I told them I would be. And then I got to go to the VA today. So I have a VA appointment. That's why I'm wearing this hat, Bedridden, just so you're tracking. I have a VA appointment today with the Veterans Affairs, and, you know, that's always fun. So I got to wear my veteran hat. I love it. Same money. Okay, let's go and check out one more chart here that I said I would check, and I believe that was Ethereum. Yes, it was Ethereum. Looking at Ethereum here, Ethereum did get a breakdown below the 236. This is a reversed Fibonacci because it's coming from different points. Instead of going low to high, it's coming high to low. This is your low. This is your high. Right now, sitting still bullish above the 50%, but we did reject down on the 382. Be watching for $1,511. We'll just call it 1,500 to be safe and clear there. But we do have that as support on the 50%. We do have the Pro Suite oscillator here saying that we do had a top trend here for a reversal, and everything is coming down. However, we are starting to hit that zero line, in the same way that I was talking about that we can get rejections on the way up off of it, we can get a bounce off of it off the center coming down too. So that's what we're looking at there. Let's go over, jump to the solo cam. Let's talk for a second. Let's check out the chat, and then we'll get out of here. I thought FOMO all week. We read that one. Ada A said knowledge is profit. It's been so long since I set up TradingView, I can't remember. Volume profiles are only available on the first level of paid TradingView. That is correct. Yeah, that's it. That's it. I appreciate. Oh, Biden. No, Biden's not on at 9:30. That's 9:30. That's still an hour from now that Biden's speaking. Lex Caliber, Lex G. I appreciate you being here, man. Guys, thanks for joining me. It's Friday. It's Friday. Shout out to Investing Bros for that term. It's Friday. I've got some stuff that I got to go do here in a bit, personal side, but I'm definitely going to be keeping an eye on the news and, on my. So here's my plan for X. Army Piper is where I do my personal tweets, my personal posts. And then Piper Academy will be for like news events and stuff like that. Although I will still be doing stuff on mine, on the Army Piper one, on the Piper Academy. I got Crux working it over there, and good friends make good content. So I appreciate them for doing that. You guys have a good one. I will catch you guys back here next Monday. If there's anything major this weekend, follow me on X at Army Piper and on at Army or at Piper Academy. You will get all that information. I will see you guys on Monday. Trade safe this weekend. Keep an eye on the charts, but touch the grass, spend some time with your family. And as always, knowledge is profit.
That was awesome, dude!